Hey guys, Kevin Burgess back again with another video. This time I want to talk about Stanley Black Decker. It is probably the stock that I have devoted the most videos to. This is actually the third video that I have devoted to Stanley Black Decker. There's been a lot going on there, and I want to talk to you about those things, the trends over time. And in addition, I'm going to kind of walk through my five pronged approach at looking at stocks. You know, the first thing I look at is their financials. How are their financials doing, and financially, are they stable? Secondly, I look at their allocation process, the way by which they allocate their capital. The third thing I look at is valuation. Is it a good value? Is it super expensive? I want to understand that before I invest in a company. The fourth thing I look at is their strategy. Does their strategy make sense? Because everything we've looked at from financials, capital allocation, and valuation is either present or the past. The only thing that matters in the future is whether they've got a good strategy, which is item number 4. And item number 5 is whether the management team has the capability to carry out that strategy and win in the long run with that strategy. So that being said, I'm going to look at Stanley Black Decker with those 5 prongs. So I want to give a special thanks to Lucas Orr, who follows me on Instagram. And by the way, if you want to follow me on Instagram, there's a link down in the comments below. Just go down there, click on that, or maybe you have to copy and paste it into your browser. But you can get to me on Instagram through that link. I'd love to have you follow along there. I find it to be a much better way to communicate. I can do things much quicker there. I don't have to publish a video and edit it and all of that. I can just put some things out there on Instagram. So if you want to follow me there, just click on over to Instagram, follow me. I'd love to have you along in that community as well. But I want to give a special thanks to Lucas for pointing out that Stanley Black Decker has not been really reported on much, on YouTube or really anywhere else that I've seen. So I thought I would take a few minutes, dive deep into Stanley Black Decker. I looked at their last investor conference. I've looked at their materials. I looked at their financials, and I wanted to share with you the points that I think are important out of all of that research that I did. And at the end of the day, what's really important is what's going on, where do we see them going in the future, and is it something that we want to invest in as dividend growth investors? And if you're new to the channel, what we are about is about dividend growth investing. We're looking at stable, solid companies who pay a consistent and growing dividend over time. And that dividend creates cash flow by which we can then reinvest either in that company or other companies. So if that's something you're interested in, consider subscribing to the channel. I'd love to have you along. And also, if you wouldn't mind hitting that thumbs up button, it lets other people know that the content in this video is worthwhile, and that would really mean the world to me. So I appreciate that. Today, we're going to talk about Stanley Black Decker. I have so many DeWalt tools, which is made by Stanley Black Decker. I'll show you later what the brands are. But I've got all kinds I got table saw, chainsaw, skill saw, weed eater, you name it. I've got tools in my shop made by this company. And so I wanted to share with you what the backdrop of the company is and whether or not it's worthwhile moving forward. So with that, let's get started looking at Stanley Black Decker. The first time I did a video on Stanley Black Decker was back in April of 2022. You can see that date here. The chart at the time with the forecast provided by Stanley Black Decker showed that their performance was going to be up and to the right. You can see that, and it looked very attractive at the time. The price was down around this point here. And so it was worthwhile for me to open a position in Stanley Black Decker. However, in August, I updated that video and showed the new forecast that had come out for Stanley Black Decker. And as you notice, instead of going up and to the right, it is now dropped dramatically, but then to go up and to the right. However, let's look at today. And let me just kind of point out to you that this drop was December of 22. December of 23 was expected to rise, and then December 24 was to rise even faster. So now let's look at today's graph. And what you'll see here is, yes, they did show a drop in 12 of 22. But look at this. Instead of going back up, they are going further down to December of 23, and then predicting that there will be a improvement. So which is it? Is it going to continue going down into 23 and then up in 24? Or are we going to continue to see this erode over time? You know, it's difficult to follow their forecast. So today I want to walk you through the points that I've found in all the materials. I'm not necessarily going to walk you through all the materials. So I've got a PowerPoint slide that I'm going to use just to point out the things that I think are important. You can obviously invest some time in looking at the materials. Everything's publicly available on their website. So you can get to it that way. But I just wanted to point out the things that I felt were important. The first bullet point I want to talk about is financial. You can see that what I found is that they are still working down inventories. They have worked down around $800 million in 2022. They're targeting another $500 million in the first half of 2023. Now, this is something that I do want to point out to you. This is their guidance. So this is the 2023 guidance in their latest materials. They are guiding now, and we'll skip this gap part. We want to look at the adjusted. They are showing an adjusted earnings of somewhere between 0, so they would basically break even for the year, up to making $2 per share. Now, for those of you who may not be aware, what companies typically will do is they will give a range around their earnings numbers, and then most analysts will guide to the midpoint of that range. So I will show you in later documents, but what Stanley Black & Decker's expected earnings number, one number, would be the average between 0 and $2 per share, which is $1 per share. So it's kind of an easy math thing that you'll actually see how that works in some of these numbers as we go forward. So I wanted to point that out so that you can see that as we move forward through some of these slides. So you can see item number 2 under financial is that the projection is $0 to $2 in non-GAAP earnings in 2023. They're also looking to reduce costs by $2 billion. They're expecting to capture, and this would be an annual cost reduction. This is not just a one-time. This is an annual cost reduction, $2 billion. They're expecting to have $1 billion of that captured by the end of 2023. And one of the things that I found in listening to some things by their CEO is that he got a question about them losing market share to Milwaukee brands. He did confirm that, although I don't have any materials that show me to what extent that is. But there's a challenge between Stanley Black & Decker and their competitor, one of their main competitors, which is Milwaukee brands. So in the financial area, they are struggling a bit, and they are working through a transformation process to try and get their financials back in line with where they need to be. They're struggling a bit because in this economy, revenues are not going to be as easy to come by as they were probably 2 or 3 years ago. So they are struggling at the moment. However, it's important to point out that they are still a break-even to $2 per share company. It's not like they're losing money. It's not like they're going bankrupt anytime soon, but they are struggling from an earnings perspective. So another thing I'll point out is that their capital allocation, they're expecting to have $500 million to $1 billion in free cash flow. Their dividends on an annual basis are around $500 million or $0.5 billion. So they are expected to have enough free cash flow in 2023 to pay their dividend and more. Then the valuation, when I look at alpha spread, Alpha spread shows that they have this is SWK's intrinsic value. And as you know, intrinsic value is really a number, but it's not intended to be just a number. There's really a range of values here. And what we're really trying to answer is, what is it worth to me today? And so as I look at this, alpha spread it does a great job of splitting out between their DCF value and their relative value. And I'll probably do a video describing more about the differences between these two. But what alpha spread does is averages it to get to $128 per share. I tend to like the DCF value. So what I would tend to go with here is the $97 per share. But you can certainly go with 160 if you'd like, or 128. I think 97 is a more reasonable value for Stanley Black & Decker. And given that it closed the day at just under $80 per share, in my world, I would say that's about a 20% discount. Alpha spread here says that it's about a 38% discount. But either way, I find that Stanley Black & Decker is discounted to their intrinsic fair value. So let's move on to the next bullet, which is strategy. And if you look at the strategy for Stanley Black & Decker, they are about electrification and technology. There's also the synergy between hand tools and outdoor tools. Just a quick story. My father-in-law and I went to Lowe's the other day. And by the way, I'm an owner of Lowe's stock as well. But while we were there, I was looking for a weed eater that would be battery powered. And we were in that section and we got to looking at all the outdoor tools. There are lawnmowers now that run on batteries. So, I mean, there's this trend toward battery powered tools, not only just power tools, hand tools, but also in outdoor equipment tools, I think is a key to the future. And that's what I like about Stanley Black & Decker's strategy, is that they're focusing on innovation and they're focusing on electrification, also coupled with the fact that they have acquired some outdoor equipment manufacturers. So if you think of the world of hand tools and the world of outdoor tools of both needing electrification, putting that together under Stanley's umbrella, I think that's a pretty good strategy. So that's why I'm an investor in Stanley Black & Decker. I love the strategy moving forward. It is a long-term play for me. I would love it to be a short-term play, but it is a long-term play. And so I think the strategy is strong. So what's left in my 5-prong approach? It is the management team. So let's go back to the PowerPoint, talk about that. So one of the things about the management team that I noticed is that they have had some unreliable financial forecasts. Now, this is leading to some lawsuits. There are class action lawsuits. They're basically saying that the management team was deceptive and they weren't giving out the forecast that they knew they should have been giving out. I find them to be a distraction for Stanley Black & Decker, but I do think they can work through them. I don't expect that they will be a significant financial drain, but I do find them to be a distraction for the management team at this point. In July of 22, they put a new CEO in place who happens to have been their former CFO and president. They got rid of their old CFO. This was not amicable based on what I'm reading. He was basically let go. And they put this new CEO in place who was their former CFO and president. They hired a new CFO in April of 2023. He comes from Fortune Brands, so I think he brings a lot of good skills and talent. And then, so I put a little bullet here that says really what I'm doing, and that is I'm going to give them some time to improve this business. They have a long way to go to make this business worthwhile. And I'm going to give them some time to do that. I think it's a worthwhile strategy. I want to learn more about this management team. I want to see them make decisions. When they make decisions, I'm going to be noting whether those are good decisions or not. And if they make good decisions along the way, then I'm going to trust that they can right this ship and get it pointed in the right direction. Now, as promised, I said I would show you their major lines of brands here. They have Stanley, DeWalt, Craftsman, Black & Decker, Mac Tools. Some of these others you may or may not have heard of, but Cub Cadet and Troy Built are both outdoor tools. So I think these acquisitions have really built a major brand value for Stanley Black & Decker. The other thing I will point out is that they are building more capability and more product lines around this DeWalt brand. So as you can tell, they've got 125 plus new products in the DeWalt brand. They are growing the portfolio of the products that have the DeWalt name on them. They're also building the Craftsman brand. So they have grown that by approximately 65. They had 30 at one point. They have approximately 95 now. So they are growing this brand as well. And again, the important thing is it's cordless. And again, for DeWalt, it's cordless. And so what we're looking at here is this whole idea of electrification. So I find this to be an exciting strategy for Stanley Black & Decker. So let's recap. Stanley Black & Decker financials, not really that hot. They are about either break even to $2 per share coming in 2023. They are seeing a dip here, moving then higher in the future. But you know what? We've seen this story before. I don't know if I would trust that or not at this point. I think if I were not invested currently in Stanley Black & Decker, I might wait for that inflection point instead of trying to predict when that inflection point will happen. Capital allocation, they seem to have enough cash flow, free cash flow, to pay for their dividend, and they may even have some cash left over to help pay down some debt, depending on whether they hit the $500 million or the $1 billion this year. But either way, they're going to have enough money to pay for the dividend without borrowing the money. So I still think they are financially in a pretty decent place. And I think they're doing a good job of allocating their capital between shareholders and the business. Valuation, based on everything I'm seeing, the Stanley Black & Decker is currently undervalued. So usually there's a reason for that. It doesn't mean that we have to buy it if it's undervalued. But if it's undervalued, then and we get comfortable with everything else, then we know that now is a good time to buy. Their strategy, I believe their strategy is solid and sound. I am sold on the strategy of Stanley Black & Decker. Now, the management team, I still think it's too early to tell. We've got a new CFO. We've got a relatively new CEO. We want to see them make decisions. We want to see them make some big decisions and sometimes some tough decisions, and see if they're willing to make the hard choices when it's needed. So based on their financial picture, based on their capital allocation, based on their valuation, and based on their strategy, I'm going to continue to hold Stanley Black & Decker. It is currently the fourth largest holding in my portfolio. When I say holding, I mean stock holding. It's the fourth largest stock in my portfolio. And so I may not add more at this point because it's already a pretty decent sized investment for me, but I'm certainly not going to sell at this point. I'm going to give them an opportunity, and it may be a year or two before I can know more about how this management team is going to make decisions. That's my update on Stanley Black & Decker. Let me know in the comments below whether you think Stanley Black & Decker is a decent investment moving forward, whether if you own it, whether you're going to hold it or add more to it or sell it. And if you don't own it, whether you consider buying it. So obviously, this video is really about me telling you what my results of the research were. It is not investment advice. I'm not a financial advisor. So you get to make your own choices around your portfolio. That's what makes this really cool. I am not recommending Stanley Black & Decker. I merely wanted to share with you what I've come up with my research, and to boil it down, maybe save you some time. And again, if you like videos like this, consider subscribing to the channel. I'd love to have you along for the journey. And with that, I will see you on the next video.